The Nigerian Exchange Limited's proposal to allow dollar-denominated listings has generated mixed reactions. The Chief Executive Officer of the NGX, Temi Popoola, suggests that offering dollar-denominated assets could mitigate forex fluctuations and benefit companies earning in dollars. While some experts anticipate benefits in stabilizing the exchange rate, increasing market liquidity and satisfying demand for foreign assets among Nigerians, others, however, are actually concerned about risks, including potential pressure on the FX rate and the challenge of attracting foreign capital to the bonds. Now, here in Lagos, Nigeria, I have joining me Aziz Lawal, Managing Director, Trust Bank Asset Management. Thank you so much, Aziz, for joining us on the show.
Good morning. I'm very happy to be here. Thank you.
That's good. Now, the NGX has unveiled plans to allow dollar-denominated listings on the local bourse in a bid to improve the country's current forex challenges. Now, is this something investors and traders should be excited about?
I mean, sure, it's something to be excited about, right? And we're actually very excited about that, really. I mean, we're beginning to have those conversations and share those excitements. But one thing is very important for any financial market to thrive, right? We talk about depth and diversity of offerings. Our audience should understand that an exchange is a very big supermarket where financial instruments are bought and sold. And like any supermarket, the bigger, the better, the merrier, right? For context, the number of companies that are currently listed on the NGX are about 160. Less than 200. South Africa has over 400. Egypt has over 200. And for New York Stock Exchange, over 2,300. I mean, that's just to give context to what the gap that is between us and our very close peers and even the developed countries. So the bigger, the better, and of course, the merrier. So we are happy, we are excited to actually get some of those dollar-denominated companies' securities listed on the exchange. Thank you.
The NGX said that it would have to do with certain kind of companies. Some selected companies would be given that recourse. So is it that it's going to be maybe some people would have the access to that particular facility or initiative, or probably there would be some sort of compensation for other companies to also get access for these dollar-denominated assets?
Yes. You're talking about the listing, right?
Yes.
Definitely. I mean, typically for a company, for companies that are listed on any exchange, it's a kind of elite list, right? So it's not a kind of an all-comer affair, right? If you remember specifically, Mr. Popoola himself, he mentioned that, I mean, they are targeting companies in the special economic free trade zones. Right, those that have the capacity to earn foreign currency, and those two lines are very important: special economic free zone and those that can earn foreign currency. So already, that kind of shuts the gate on some companies, right? Because I mean, free trade zones, they kind of provide a liberalized system for foreign trade. I mean, these zones typically are meant to support export-oriented industries and ensure that there's an increased sustained foreign earnings into the country. So to answer the question specifically, is an elite list that definitely is not going to accept all commerce, but rather based on the specific targets of the exchange in this regard. And from what Popoola said, companies in the free trade zone and that can attract foreign currency earnings.
This proposal is said to be presented in terms of opportunities now to companies who have diverse business models. That is for those who actually generate revenue and report profit in dollars. So which kind or what kind of companies in Nigeria do you think fall within this bracket?
That's an interesting one, right? I mean, what comes to mind, particularly if we look at from what Mr. Popoola himself has said, if we are narrowing it down to specifics of free trade zone, and capacity to earn foreign currency. I mean, the first company that comes to mind that we can all relate with is probably Dangote Refinery, right? It's within that zone, and of course, we expect that when the refinery comes to full operation, right, we expect that we'll be serving some other African nations, right? Then also there are some companies that are currently operating in that zone already, and there's the Colgates of this world, there's the Kellogg's, right? And I mean, also the Lekki deep sea port itself, it's also a kind of, I mean, it's a company that can get listed on the exchange, right? Then also for context, for example, we have some companies, for example, that are currently listed, right, on the exchange itself outside these new requirements, like Airtel Africa, EcoBank Transnational, right? These are companies that pay dividend in dollars to companies or to investors already, and these are companies that some investors target specifically because they know that periodically they're going to get dividend, and those dividends are going to be in dollars, right? So for the purpose of context, I mean, those are examples of, okay, fine, the companies with potentials to be listed based on this new criteria, and an insight into some of the companies that are already listed and give dollar earnings to investors. Thank you.
All right, just as you have said, this means that this could be a potential investment opportunity, most especially for these companies that pay their investors in dollars. But then, are there any possibilities of maybe risks or challenges associated with this particular plan or proposal?
Yeah, thank you. Yeah, in terms of risk, right? Definitely. I mean, we're talking about the market where typically we talk about returns, and what goes with returns really is risk, right? So there are risk attached to this, and look at the example I gave. I talked about ETI, Airtel Africa. These are companies with diverse earning capabilities. They earn across Africa, right? So they actually get earnings in foreign exchange. So the risk for new listings, particularly under this new proposal, is that the source of the company's earnings is very, very important. If you are getting FX from abroad, you are bringing fresh inflows in terms of revenue into the country. That's a very good one. But where you don't earn foreign currency from abroad, but you want to pay your investors dividend, and at every point you want to pay dividend, you have to run CBN to get FX, and still kind of put pressure on the lean supply that we have presently. That's the risk, right? Where companies that are listed under this arrangement do not have the capacity to earn foreign exchange, but rather will still go to the lean reserve that we have to fetch and pay local investors in. So that's the risk, where you have companies that are listed in under this new arrangement but are not earning foreign currency, and end up putting pressure on the dollar basket of the country that we're already complaining that is too lean already, right? So that's the major risk for countries that are not earning foreign exchange. It's a very, very big risk. They'll end up putting more pressure on the naira. Thank you.
So, all right, so talking about this particular proposal now, the dollar liquidity challenge that the country is faced with, would you say that this proposal is in a short, mid, or long-term plan to actually shore up dollar liquidity in the market? Because, of course, when you talk about the ultimate goal, which is to ensure forex availability and, of course, to reduce the pressure on the naira, you want to talk about a long-lasting plan that can ensure that we have, of course, a long-lasting plan that rolls on to ensure that we have enough forex, enough dollar in circulation for those that may have the need of it. So what do you think?
Yeah, for the tenure of the plan or the proposal, right? It's a capital market. So typically when you're talking about the capital market, you're not talking about short term. It's typically long-term plan, long-term, right? So I would expect that this proposal and this plan is going to be a long-term one. So talking about that, on if it will solve dollar liquidity, I mean, like I mentioned earlier, right? It will if there are fresh inflows from outside the country. It will if the fundamentals of these companies are strong enough to attract foreign portfolio investors with fresh inflow of foreign currency for investment. So I believe this again. I believe this plan is going to be a long-term plan because of the nature of the capital market. Number two, it will address illiquidity if this the companies in the categories of this proposal have the capacity and fundamentals to attract foreign portfolio investment, particularly fresh inflows. Thank you.
As he's talking about how it would attract this specific kind of companies that have these foreign investment portfolios, let's look at it from the angle of the free zone area. Those in the free zone area with top line revenue to bottom line in dollars. Now, are there certain conditions that the exchange or even the market must meet to actualize this?
Yeah. Like for an exchange to list on any exchange, there are usually conditions and requirements. And presently, we have about four different buckets for any company that wants to list on the exchange in Nigeria. So you have the premium board where you have the biggest companies really. You have the main board. You have the SM board. You have the board that we call SM. Then we also have the growth board. I mean, across these different boards, there are requirements and criteria for joining in terms of the size of the company, the performance of the company over a period of time, and corporate governance and other requirements like that. So we expect that by the time the exchange finalizes this plan, I mean, they will come up with requirements for companies to be able to for companies that are eligible to actually take advantage of this proposal. And like I've said, right, and like Mr. Popoola himself has given an hint that, I mean, these are companies that will be the companies that will be targeted in this regard are those that have the capacity to earn foreign exchange. So I believe that in terms of size, I mean, we are going to be talking about unlike currently, where you say that to be on the premium board, or you need maybe 100 billion capacity to earn 100 billion in naira, right? I expect that this new criteria will find capacity to earn $2 billion in terms of revenue, capacity to earn to have a sustained PBT performance of over $500 million over a period of time. So we know that, I mean, these are criteria that are measurable and sustainable. So I expect that once this plan is finalized, there definitely will be specific requirements for these targeted companies. Thank you.
Let's not look at how it affects the Nigerian economy. Though the analysts have said that it is a good plan, but they are actually skeptical about how balanced and how stable the Nigerian economy is. But then when you look at the readings vis-a-vis this discussion, are you seeing or reading the possibility of a Nigerian economy being stable at the long run? Or there are still some challenges that might not make this proposal actually actualize its main purpose?
I mean, so this is very realistic starts to kick in, right? Really, on the face of it, it's a very beautiful idea where you provide a platform for companies with the capacity to earn foreign exchange to come and list on the exchange for people to invest and diverse create that diverse portfolio for their investments. Solid idea, right? I mean, but to be frank, I mean, stability of FX markets is a prerequisite for the viability of foreign currency denominated securities in Nigeria in any form, really. If there's no stability of FX, I mean, we are just not serious about it. We are all just like not ready for this, right? Like currently, for example, I mean, in the Naira world, in the Naira asset world, right? companies are hesitant to issue bonds and shares denominated in naira. If for those that are conversant with the market, they will tell you that the last, I mean, even you yourself, right? I'm sure the last time you heard about these big, I want to buy shares, IPOs, initial public offering, and the last time we heard about that kind of environment was probably before the financial crisis in 2008, right? This is 2023. I mean, like over a decade down the line, there's an apathy towards initial public offerings in the market, because you're not sure they're going to be successful. So the new issues that we are seeing are more of rights, new listing by introduction. So I mean, the point I'm trying to make here is that, I mean, investors remain worried about investing locally to preserve their wealth. Like the possibility of achieving scale, I mean, with issuances and subscriptions with such new foreign currency denominated securities is I mean, within the same market definitely appears very bleak, right? Because even for naira, we are struggling, right, to attract fresh investment through IPOs, where you know that, I mean, these companies coming to the market for the very first time, and people are willing to take that risk. So for naira investment, we are struggling. The market is kind of very bleak in that regard. So for foreign currency denominated securities, I mean, that's the worry is still there, right? And also, dollar-denominated bonds or shares directly expose both companies and investors to exchange rate and interest rate risk, right? And a further depreciation of naira against the dollar we continue to raise these worries, particularly repayment costs for companies. Likewise, I mean, as global interest rates continue to rise, it will kind of reduce the value of the bonds. If a company comes to list a bond, for example, and there's rise in interest rate globally, the value of that bond will reduce. And what that means is that for an investor, the value of your investment have reduced, right? But by the way, I mean, we already have companies that are listed. I mean, and that's a good example, right? We already have companies that are listed on the exchange and have some of their borrowings denominated in dollars, right? And some of the poor performances we've seen in the last quarter, that's, I mean, as a Q2, right? Some of the companies with the lowest performance are those with dollar-denominated debts, where they are declaring billions of dollars in losses. Why? Just because they borrowed when the exchange rate was much lower, and now they have to pay back when it is over 700 naira, and that's an issue. Quite a number of them are suffering losses as huge as over 100%, right? So, I mean, that gives you, it's a kind of window into some of the realities we are going to face when these companies beginning to list, right? Because we can actually go into the books of companies that are already listed on the Naira exchange and look at the size of the foreign denominated those with borrowings that are denominated in dollars. If you look at the performance of those loans vis-a-vis their bottom line, it can give you like a reality check into what we'll be expecting.
True.
Like for these companies, for example, investors, some of them have lost over 20%, 30% of their values. Some have lost over 50%. Why? Just because they borrowed in dollars, and now the naira has been devalued, and they have to pay double what they borrowed just because of devaluation. So that's the reality that may possibly strike us. Thank you.
I guess that's a precarious situation for investors that have to lose money due to fluctuation of either the naira or the foreign currency, as the case may be. But then Aziz Lawal, Managing Director, Trust Bank Asset Management, thank you so much for talking to us.
Thank you so much for having me. Thank you.
As discussions continue, the broader Nigerian community is keenly observing the developments, recognizing the potential benefits and risks associated with dollar-denominated listings. As it is, The Nigerian financial landscape is seeking to strike the right balance between opening the doors for global investors and, of course, safeguarding the interest of local businesses and the naira. Even the foreign investors are also concerned about their investments. It's a dire situation, as the case may be, but then maybe parity can be found looking at the policies of the Nigerian government and, of course, the Central Bank of Nigeria. We'll go on a short break now. When we return, we'll bring you international business stories. Don't go away.